This is, the famed investor, noted investor Akash Prakash, who runs a few $1 billion of money here in India, who's basically written a column. He writes a piece for the Business Standard, and we've picked up the latest in terms of what he's saying here for this piece. So, this piece basically is based on, as he calls it, meetings with some of the top global asset allocators who invest in countries around the world. And he's kind of sort of weighed in with the feedback that he got in these meetings recently on these issues. So I'll start with China, right? Now, the titles are mine alone. I mean, I'm paraphrasing in a way, but this is what he writes. He says, in previous meetings, there were many allocators who had not given up on China. Today, the mood is very different. And everybody has limits on their China exposure set by their boards or trustees. So his point is, generally, there is a fair bit of disenchantment on the Chinese front. Will that mean that flows out of China will come to India? We talk about manufacturing, China plus one in the context of manufacturing. What about China plus one in the context of flows? Here he says that many of the institutions, global institutions, have short-term liquidity pressures. So when they sell in China, the immediate use of the capital is to fix some of these short-term liquidity issues. So, that is slowing the movement of capital, portfolio flows from China to India. On India itself, I mean, there is more interest, and the view, he says, is much more longer term. He says there is high level of interest among allocators who historically have not bothered with the country. That is interesting. He says growth prospects were mentioned in every conversation, the 67% growth here, the 15% earnings growth, which is not to be found anywhere, at least for the next couple of years around the world. The ability of India to deliver high-quality compounders was consistently mentioned in these meetings, and he felt there was a sense of there is no alternative, that famous Tina factor, that's his sense. He says the strength of the domestic sentiment, domestic flows which have become so large was also appreciated. So that's the bit about India, where there is a fair bit of interest. Elections are coming up, right? So this is a topic, I think, which will gather more and more interest. He says there was little concern about the upcoming elections, state elections or the general elections next year. If you can move the graphics along. There you go. So there was little concern, and most global investors seem to assume that the current political dispensation will continue, right? So that's interesting. No one's really bothered about any sort of upheaval or anything of that sort. About US itself, he says, looking forward, US has all the innovation, is energy surplus, the best demographics, and has got the best companies as well. This is all feedback he got from these big, large global asset allocators. And he says that a question which comes up often in these meetings is, why go outside? Why not stay home? I mean, home, for the US dollar is the US, and since it's got all these advantages, why go outside of it? That's, again, interesting. To sum it up, this is Akash's own view, and this is how he ends the piece. He says, my sense is that money will come to India, but it will take some time to materialize. Money from China, from other parts of the world, which will find its place here in India. He says valuations are a real stumbling block, and a market correction would give new investors much more comfort. And lastly, he says, long-term case for India continues to gain traction, and the opportunity is ours to lose.